Three. All right. Hey, welcome back to the Go for CEO channel. I am so excited. We are going global, ladies and gentlemen. And right now we have a special guest from, yes, down under Australia. And of course, yes, I plucked them out of Clubhouse. It's been a good buddy of mine for the last 6 to 7 months. I haven't seen him lately or talked to him, but he was so generous to spend some time with us. It's morning in Australia. It's afternoon in our time here in the United States in Chicago, but super excited because he's been a serial entrepreneur. And, we bring you the CEOs, the founders, the entrepreneurs, and the intrapreneurs for the Go for CEO channel to learn from local to medium-sized businesses that really are blowing up across the world. So super excited to have you on, Nathan, from Sprint Finance and many other businesses. So thanks so much, buddy, for coming on.
John, thank you so much for inviting me on. I'm a big fan of your show, and I'm a big fan of yourself as well. So absolute pleasure to spend some time with you today.
I appreciate it. Well, yeah, I created the persona, right? John the Bomb, building others means business off a Clubhouse. And you were one of the proponents of just cheering me on and likewise getting the chance to get to know you. And we've done this once before of getting off Clubhouse and, having a chance to get to know each other a little bit more. So super excited to have you on. And I think the Go for CEO community is going to learn a ton over the next 30 to 45 minutes about just the mindset and how you've been able to build business. And you just told me offline, you've 3x'd in the last 6 months. That's pretty darn impressive. So why don't we start with Nathan, share with us a little bit about the ideation of it. What is it that, came about? How did you start to think about the current business that you have, the one that we're talking about, Sprint Finance? And then obviously we could talk about some of the other ones as well, but share with us a little bit of that backstory and then we'll get into the meats and potatoes.
Yeah, sure. So the great thing about a finance company is, you're a finance professional as well, is the flexibility and the ability to scale and the ability to build your own reputation. A lot of standard businesses, you'll need orders, you'll need inventory, etc. Whereas ours is really a consultative business, and that had always appealed to me. I had a family background in that industry, so I saw what it was like firsthand. And I was running a party entertainment business at the time. It was about late 2010. And I was looking for something that would give me more flexibility and something that I could grow, but also use the skills. A lot of people say that they're a numbers person. I'm not really a numbers person, but I'm a numbers for solutions type person. I'm very passionate about property, the benefits that come from property ownership. So it was just a natural transition, John, into this industry itself. And I remember when I got into it, I thought, well, yeah, I'll give it a try for about 6 months, and here we are almost 11 and a half years later and still absolutely loving it, which is great.
So awesome. So awesome. So you had entrepreneurial background. You'd already built a business or two and, just kind of the background of it. So were your parents kind of enablers of that? Or was there a sibling, someone that maybe was a mentor, someone like that, just to kind of give a little bit more of kind of who you developed into?
How we got there. It's so funny because when I originally thought about it, I thought, well, I had a father who had his own business. He was moderately successful, but he was really just a one-person band. And I thought that must have been where it stopped. But then I started thinking back, and I remember all the way back to when I was about 12 years old, my brother used to buy comic books, right? And you think, what's comic books got to do with running your own business? But he would buy these comic books, and at the time, a first edition comic book would sell, say it was a Simpsons. Remember the Simpsons comics first came out? So a first edition would sell, a second edition would be worth nothing. And so he would just go to the comic shops, and for $3.50, he'd buy up a big bundle of these first editions, preemptively thinking that these are going to go up in value. And then I'm 4 years younger than him. I'm going along to these computer fairs and I'm dealing with the hustle bustle, and people 2-3 times my age are buying these from me. And you would sometimes have to negotiate on price. So I think that's where the seed really started to come about, was just very, very early, not even a teenager, but just before I became a teenager. From there, when I was a little bit older, I set up a drinks business at school, undercutting our school canteen to sell drinks. And I think that I was really attracted to the flexibility that you have to be able to earn your own income that is really only possible when you're running your own business. There's some good sales positions now that people can get, but that flexibility is what always attracted me. And that client interaction, the ability to not sell someone something, but to be able to find a solution for them. And I think that's something that carried through to the later part of my career is really, it's about the solution now, not simply I want to sell someone something to get an outcome, but it's I want to know what they want, and then figure out how we can help them achieve that.
That's fantastic. So now that we have a great foundation and kind of just seeing the mindset of where you were, just thinking already from childhood to developing different ways to, like you said, undercut the canteen. That was pretty awesome stuff. So, but you were running a business, right? And you were seemed like a little bit dissatisfied just in the sense of what it totally would produce. And then you found the finance business. So give us a little bit of the structure. What did you initially do? Someone that could want to open up a finance business, what area of finance, because there's a very broad finance area, but what area of finance, and then how did you structure it so that you started to be like, hey, I'm ready to launch?
Yeah, so I was incredibly fortunate, and I don't think many people would have this opportunity. But my very dear friend at the time, who I'd known for 4 or 5 years, was selling properties, and he needed someone to slot into it. So it's not every day that you're going to have that opportunity. But he had this problem. So his problem was that he was selling all these properties, and he was giving leads to finance brokers that were doing residential mortgages, and they would say, yeah, we want to deal with this client. No, this one's too hard. Yeah, we want to deal with this one. This one's too hard. And then it started becoming, this one's too hard. This one's too hard. This one's too hard. This one's easy. And he was said to me out of frustration, he said, look, I'm trying to run a business here and I can't find someone that wants the business. And I
Hmm.
said, well, I've got a background in it. So I think the first thing is, there's two ways of looking at it. One could be I was incredibly lucky. I had a dear friend who gave me all of the business. The second one is that my ears were always open for an opportunity. So he didn't ring me up and say, Nathan, I need you to become a mortgage broker. I need you to fly from Melbourne, where you live, all the way across to Perth. He just simply said, he was in Perth, which is a different part of Australia. It's about 3.5 hours away by flight. And he just said, I've got this problem. And I thought, well, I've got a background. I've had family that have been in the industry. Why don't I pivot what I do? Because I could see the future, and it was already something I was passionate about. So I think it's not so much one industry over another, but if your ears are always open, there's opportunities that are just hitting every single day. And I think a lot of us, we're trying to find the magic thing. So we'll try something for a little while, and it doesn't work, and we run on to the next one. But if you're just always keeping that open mindset, that I'm open to really good opportunities and I deserve it, then when they come, they fall into your lap, literally like this one did. And from there, though, it's one thing to get the volume, right, John? So you get the volume through, but then you've got to match that with the delivery mechanism. So how
Mhm.
did we learn that? Well, terribly. We learned through, we made every single possible mistake. I thought I could solve problems initially just by hiring lots of people. So I hired lots of people. It's what you do when you start getting revenue, right? So what we learned over a period of time is it's not about people, it's about the process. And then if you've got a good process, then you get good people. Whereas people all want to find that magic bullet of, I just need one good employee. Have you heard that one before?
Mhm.
Just need one good person. But it's not. If you've got a good process, then a good person will want to work in a good process. There's good employees don't want to work in bad processes unless they like a massive challenge, and that's a different thing. So we had to learn to build a methodical process, and that took several years. In fact, I would say that we're still developing the process today, but as the process gets bigger and the process gets better, we're able to scale it, and we're able to find better quality, or not so much better quality stuff. We have a lot of great stuff with them. We're able to find people that really support that vision and enjoy that process, because people don't want hectic disarray, right, when they're working. They want to be able to go to work, feel empowered, and learn something, and then go home at the end of the day and enjoy the time with their family. So that was probably one of the biggest things if I could go back in time. Although the thing is, though, John, as you know, usually when you reverse engineer everything, you're kind of happy that you made those mistakes early on, because they were just really great lessons that generally help you.
So I enjoy that you took us right into process, right? People, product, and process typically are kind of those three different areas of business. I'd love to go a little bit deeper because the Go for CEO community really is here on a daily basis, learning from small to medium-sized business owners like yourself. So help us understand. So you had a friend that was doing really, really good on the real estate side, but needed a financing partner. You get this opportunity. You're like, wow, this doesn't come around very often, as you stated, right? So what did the actual activities look like, and what do they look like today? So give us that journey, and how then did you really start to master these processes that you're talking about, specifically on like, hey, the client would call in from the real estate, he's doing business with my friend, and now we start the process. We take down the information, we evaluate this, we look out to lenders, those types of things.
Yeah, sure. So just to sort of go back again, so we've got a situation where he's got all these sales, but he's got no one that can match it up for that. And so the first step was there was no customer service that was being delivered. So the first thing that we did was we were jumping on the phone to clients very, very early on in the equation, having that nice conversation with them, because all people require, they don't require a solution immediately, but they like to know, most people, they work on check boxes, right? So they like to know, okay, that bit's sorted, and then they can move on with the next step. So the step one was that we had to figure out a really, really good way that we could provide a tremendous customer service experience for someone. Once we got the front end side of things, and then the next area we struggled with was the delivery initially, because we went from 0 to go straight away. And that's an interesting thing though. And I'm sure you've spoken to some other entrepreneurs. People often think that the journey has to be slow and gradual, but often what will happen is that there will be a period of plateau in your business and then a period of rapid growth. And the only way that you're ever going to be able to handle that is if you've got a system. So the system that we use today, we track a loan from every single step of the way. So if you were to come into our system today, you would get a phone call. There's a period of time between that phone call. If you would decide to become a customer, we would collect documents from you. If the documents haven't been received in a period of time, we'd have a process of following up. There's a combination of automated phone and email. And we always do the 3 processes, because we found it's one thing, it's very easy to set up a business that just sends texts, just sends emails, but people are doing business with human beings. That's why they're going to us, that they're not looking for an online lender, and that they exist and they have a place in the market. But for us, they're wanting that personalized. And so then again, it's just simply tracking the whole way through. And there's a whole bunch of variables, but the step one is you write them all down in an Excel spreadsheet. You jump on a Zoom like we're doing now, you do a screen share and you record it. Because if a lot of business owners keep all of the IP in their head, and they think, and I was this person initially, and they think that they can solve it by just hiring more people. And then when those people come and they don't understand what's in their head because they don't read their mind, they get angry that they don't understand it, and they think that they've got the wrong person. And it took me about 7 assistants to realize that I didn't have the wrong assistants. I was the wrong boss. That process.
Wow.
I think it's a matter of just being honest with yourself about it and just saying, so the help that I got, I got mentoring and coaching. I mean, this is things like what your channel is providing business owners. You're saving them not only time and effort from the mistakes, but costly mentoring that they may, but it's not even the cost of that. It's the opportunity cost, how inefficiently I ran my business. You couldn't even put a dollar figure, or you wouldn't want to put a dollar figure on how much it costs you by being inefficient. So it's step it down, methodically look at it. Even if you think that something is irrelevant, record it in the process, because what you want to do is you want to be able to grab, and we found Excel was really good for this. You want to be able to grab it and you want to be able to look at it and go, does this make sense? And then explain it to someone that's not involved in your business, best friend, partner, parents, and just say, does this make sense? Is there something I missed? And then the last thing is, don't fall in love with that process. A lot of people there, it's got to be this way. Well, actually, no. I tell all of the people that work with us, because they're not staff, they're working with us. I tell them that if there's something that we're doing that doesn't make sense, or you go, well, that's silly, we've doubled up, well, then tell us and we'll change it. So it's like a living animal as opposed to a set book on the whole way through.
That's awesome. That's awesome. So that's really, a dynamic way of really kind of channeling the process side of things and really thinking about it specifically and systematically, right? So let's go into, I mean, obviously it's finance. So where are you getting the money? Right. So where's the money coming from? So what are some of the ways that I don't know if it's different completely in Australia, but did you set up relationships with banks? Are there private lenders, private equity, family office type money? Or maybe did you yourself and your family just plop down $100 million and start financing people? Like what was the process of that side of things?
So in Australia, the role of a mortgage broker is effectively an intermediary between a client that wants finance, and that'll be someone that wants to buy a home, fund an investment property, and there'll be a bank. And so our system in Australia is, so we've got the client, we've got the mortgage broker, we've got what sits in between it is an aggregator, or in other countries you might use the word dealer group, but effectively a broker plugs into this actual channel of the aggregator. The aggregator has a direct relationship with the lender, but that relationship falls down to you as well. So our major banks, ANZ, Westpac, NAB, CBA, we deal directly with them along with a whole host of other lenders. And that's for what we'd call a prime style mortgage. So just the easy, straightforward bread and butter of the industry. But then we'll have lenders that have an appetite for slightly more challenging or risky deals. There might be people with credit related problems that can be explained. They may be borrowing for business purposes. They may have had trading financials that are very new. So then we've got private lenders and we've got what we call second tier lenders. And so part of what our job is to do is really when an opportunity comes in is to identify where it's going to best fit. And that's where really the kind of the IP of the business is going in full stead. And it's not just about finding a strategy for their immediate deal. So we, like, for example, we'll have someone come in, they may have only been trading for 6 months. So I'm not sure what the rule is over there, but generally a bank wants to see at least 12, if not 24 months of business trading history. And they want to see company financials. So we will have someone that came in recently, they had less trading time, they had a very big deposit, and they had a very profitable business, but the banks wouldn't look at it because it's too young. So we found them a lender. That lender is going to charge them a much higher interest rate, but they're fine with that, because at the end of the financial year, our financial year ends in June. So by about mid-July, they'll have their tax return done. And then we can take them from that higher lender back to a standard prime lender. So what we're really doing is we're strategizing with someone to achieve the goals that they want to achieve. And in their case, they feel very positive about this property and the property market in general. So they'd prefer to get it rather than wait and hope another property falls on. So that's where our process comes. But no, not our own personal money. John, in answer to your question.
Well, and I love what you just said there. You know, I deal with this all the time. I had a gentleman that called in for business. I'm on the business capital side. And, you know, he said, hey, I've tried 3 or 4 banks and this is the structure of what I want. And, you know, this is what I have in down payment. And this is what I'm trying to do is buy this building and then put this business in. And I gave him some structural things. Here in America, we call it seller financing. So can the building owner currently that's selling you the building hold some of the note, as an example, right? You know, can you get some money gifted to you from family, friends, relatives, whatever? And it's interesting because he literally told me, he said, you're the first guy that's thinking outside the box. And that's what you just said about that specific deal is you structured it so that, hey, for 6 months, yeah, okay, fine. You're going to pay a little bit higher interest rate, but the annual, you know, for that is really nothing compared to what you really achieved, Mr. Client or Mrs. Client, is you got the deal done, you got your property, and then 6 months from now, I'm going to transition you to, yeah, a better rate and a better term. So really, really cool stuff. And that's part of learning your craft, ladies and gentlemen. You know, if you are learning from Nathans of the world and everywhere around the world, it seems to be the same thing,
John's
right?
of the world as well. Let's not shortchange you, John. But yeah, and that's exactly it. And that's the reason why I feel there'll always be a place for a human being involved in just about every single industry, because an online calculator isn't going to give you that strategy, right? And that's really, a lot of people think, like, whenever someone says to me, well, you know, what is strategy, or why do I need to pay a premium for strategy? I go, well, strategy is, you ever bought a cookbook? Have you ever bought a cookbook, John, and tried to cook one of those meals in the cookbook? I don't know about you, when I've tried it, it turns out horribly. Like Jamie Oliver writes a cookbook and you follow it step by step, right? Or Gordon Ramsay step by step. And then you look at it and it's like it's burnt or it's undercooked. But when they do it, they're using the same ingredients. They're getting a really good outcome. That's strategy. That's what strategy is. So it's the same thing. You can do everything yourself. You can completely replace human beings in your life and do online lending. But the outcome you get probably won't be favorable, because there's no online system yet that has enough AI to be able to say, well, hang on a second, if like with your client there, well, if you get a 10% deposit from a family member, but you also get 10% from the owner, and they effectively vendor finance a component of it, then you can get into this asset now, knowing that they may have a sale of something else coming through, or there'll just be general equity growth in the asset. And after 12, 24 months, they'll be able to do it. But that's what people are going to professionals for. And I think that what you demonstrated there was a great solution. And I'm sure that you would have won the business with that client there, right? Because you're providing them an option that no one else, and they'll stick with you for the rest of their business needs.
Yeah, no, in fact, it was interesting, just not to segue too much, but one of my retail partners was able to help him with what we call a home equity line of credit because they had paid off their condo. So even though liquidity wise, they weren't really there, we were able to get a home equity line of credit, access some capital, seller finance a part of it, and yeah, we're off to the races. So, but awesome stuff. So we've got Sprint Financial, and you're really growing this thing and starting to put the momentum behind it. So you talked about people, right? Obviously, you had your process. And now let's talk about people. So what was one of the first things that you learned? And I know you had a business before, so I don't know if the dynamic there was employees and you saw your dad kind of be a solopreneur in a sense, but what were some things that happened when you started to bring people on and now it's like you're a leader, not just a solo producer?
Well, the first thing that happens is your productivity massively drops in because for most of us is when you're doing solopreneur, every deal that comes in you're dealing with, right? So if you come into me as John the client, then John the client's going to get an update from Nathan, and now all of a sudden John the client's getting an update from Chanel or Michelle or someone else, and they don't know them, they don't have that relationship with them. Some people, they don't like that as much. They like to feel that they're dealing with the owner, right, the whole way through. That's one of the challenges. The second one is now you're dealing with people-based issues. I'm sick today. I've got some issue. I've got that side of things, and it was really, really easy. So early on, we went too big too quickly in terms of staff, and then I removed myself almost from being completely the broker, which was sales, and then I was focused on the people management. And I didn't want to do that at that point. I wasn't geared towards it. I was too I wasn't too young, but I was too emotionally young to be able to handle those things. And I just thought that I could use pure energy and push through it. And it was a learning curve for them. And I'm sure that apologies to anyone that worked for me in the first couple of years, it would have been a horrible experience, I'm sure. But I can look back on that now and go, well, thank goodness, because I learned from that. If it was still that way now, then I'd be very worried. I think one of the best markers is how long your staff are staying with you is a good marker of, and are they actually improving the whole way through? If they're still exactly the same as when they first came, a lot of people will say, well, they're not learning, but I'd say, well, you're not managing, or you're not giving them the opportunity to grow. I think that was probably one of the big mistakes. The other one was I basically built people that were doing what I told them to do. I wasn't empowering them. And it wasn't, again, because I didn't want them empowered. It's because I didn't know how to empower people so they could solve things. And I also made the mistake early on that if it wasn't done exactly my way, then it was incorrect. And again, you look at all these things now and you shudder, right? Because this is how to completely blow up a business, is everything I've just said. But the problem is there's not great teachings and learnings where someone actually goes, well, this is how you. A lot of people focus on the longer term scale. I think what's great about your channel, John, is that you really focus on that initial SME growth. So from that very, very that incubation period, they may not have even had a business to now they can actually move it to a small team, and everyone else is focused on the revenue side of things, but not the process and the team dynamic that goes along with it. So.
Well, it's unfortunate in the United States. I don't know if the statistics are the same down under, but 95% of businesses fail within the first 2 years, and like 99.9 something fail in the first 5 years. So the statistics are horrible. We've got about 27 million small businesses in America, and it's interesting, right? Because that means that like 100 million started, or way more than that. And really there's only a few left. Right. But it's been an interesting time. So help me understand, and let's walk us through, and then we'll kind of get to the ending part of our interview with our CEO model. But the funding side, I'm very curious. So when you started the business and you went to these banks, what was some of the ways that you courted them, or were they courting you because you're bringing business to them? So what was the dynamic there?
Yeah, so in Australia, it's really, really easy. So the mortgage broking industry is very, very mature. When I was there, it was sort of at the mid-level of maturity. So by slotting into an aggregated group, the relationships are already there. So they've got business relationship managers in Australia. They call them BDMs, business development managers. They'll partner with you. These people at that time were even more hands-on because their portfolio of brokers that they had were smaller. Now, as the industry is even more mature, they sometimes have a 500, 600 people under one of them that they're building a relationship with. Trying to catch those guys on the phone can be hard. But the market was just already matured. They very easily walked us through the business. The training that they all give was fantastic. So that wasn't really the challenge. The challenge was learning the intricacies of the policies of every single lender, because they all had different things they liked to do, and it used to change, but it didn't change quite as fast. And now it's a very, very rapidly changing environment. So a large portion of what we do is learning, okay, they'll do this, but they won't do this. Something such as financials. Some banks want 2 years worth of financials. Some will take 2 years of financials and they'll average. So if you had 50 grand in your first year, but 200 grand in your second year, they'll take 250 divided by 2. Some will isolate that 1 year. So it's about learning those intricacies. Some will isolate it sometimes. So that's what happens. As you become a higher volume broker with lenders, you'll get access to better quality support. As with anything, right? As much as people don't want to admit it, everyone segments their customers to some extent. So as we got higher volume with some of these lenders, we found that they would then introduce us to credit managers. And the credit managers were ultimately people who could make a decision as to whether it was a yes or a no. So a large portion of our time then became cultivating relationships with those people, learning what it is that they liked and didn't like, and learning how to really get them to see things from the view that we have, because that's often what happens. So as far as we didn't have to say, hey, we need a funding line or anything like that, no. All of the banks were open for businesses. Australian banks, I think at most of the time, our 3 major banks often sit in the 10 most profitable banks in the world. So they're definitely open for business. And it's very, very easy to deal with for the most part. But again, they've all got policies. As you know, you're a finance professional. There's always, it doesn't matter whether it's private, whether it's commercial, whether it's residential. There's always going to be things that a lender likes and has an appetite for, and there's ones that they don't.
That's the perfect word I was thinking in my mind, the credit appetite, right? Everybody's different. And it's interesting. Like you said, too, it could be dynamic. For 6 months. They're really bringing in investment real estate. And all of a sudden they shut off the door and they're like, hey, we have a full portfolio. That's all we want. Now we want to switch over. What's that?
Yeah. Or a development site. They may say, for example, one will like apartments 1 month, and then a few years later, you'll try and take the same thing that worked, and they'll say, hey, we don't want apartments. And they'll have exposure levels, but that's what our job is. We have to know that before it happens.
Yeah, and then guide our clients, right, and have them have an experience that doesn't waste their time per se, right? That's one of the things that I always sell is like, look, I'm going to look at your financials because I know what we do, and I'll send you off and refer you to someone else that maybe has a better appetite for your specific business, if we're not the right choice, right? And they appreciate that. So there's a lot of greatness behind that. So awesome. Look, I know that we're a little bit pressed for time, so I want to kind of get to the last part of our Go for CEO channel interview, which is the C, the E, and the O, right? So client experience, employee engagement, and operational excellence. And I know that you touched on pretty much all of that already, but I'd love to hear how Sprint Financial and just like the value proposition, like when you think about it and you take a step back, what is it that really is the differentiator for client experience, for one?
Yeah. So, firstly, and I absolutely love that question because a lot of us as business owners, especially in this type of industry, we can fall into the trap where we go, "Oh, we cater to everyone." And so, if you go, so if someone says, "What's your ideal client?" Well, anyone needing finance, and that's true.
Mhm.
So, really, what caters to us and what sort of experience we found very early on, there were two industries that we just really, or two segments that we were really good at. One was property investment, and no surprise, I'm very pro property investment. My family are very pro property investment. So, well, really understanding the intricacies of what a property investor will do. Our market tends to double, sometimes quicker, but every 7 to 12 years, our market will actually double, our property market. So, what will often happen is someone will want to buy a house and then they'll decide that they want to upgrade that house and they'll usually sell to buy the next one. But we started tracking data on this and going, well, you sold that house in 2015, it's gone up in value by 30%. So we started to reverse engineer. How are we able to get them to hold on to that house for longer? Right. So as a result of being able to get people, now this wouldn't work if every single person did it because there'd be no liquidity in the market and no one would ever sell houses. So that's the caveat to this. We don't want the whole world to do this, but for our clients, we want to see, if possible, if they can retain the actual house that they've got. What that actually does for the client is it makes them significant paper wealth and real wealth money because they hold onto the property for longer. The second thing is we segmented down to self-employed borrowers. Again, we do other sections, but we found self-employed borrowers had unique financial needs, and quite often their financials were very complicated. And through trial and error, I learned how to read financials, understand them,
Mhm.
speaking to accountants and figuring it out. And so, yeah, again, with the example of the 50K one year, the 150K the next, so that the client experience that they have for those two segments, we're just super, super strong. What we aim is we want people at the end to send, like we just got the other day, happy text messages, happy Google reviews, happy emails. That's when we know that we've actually won, and we can tell that by the frequency of that actually occurring. But we don't leave it to chance. We have customer service that are dedicated to having conversations with them during those points.
Well, I'll tell you, the thing I picked out there very, very poignantly is education, right? You're educating the client specifically on where they can go and what the differentiators is. Because, a client is, just looking for a solution real quick, especially in this type of atmosphere. And you just told them, hey, if you keep it and I could still get you that next house, what about the wealth that you're going to be able to accumulate? So it's pretty awesome stuff. So, all
And
right.
I
So,
use my parents as, sorry to digress, but I use my parents as an example for that because we've got the
okay.
house. So in 1997, they bought a house for 150,000, cheap.
Mhm.
They sold it for 715,000. This is the family home I lived in 2009,
Hmm.
and flat, right? They more than 4x their money. The thing is, it sold 6 months ago, so actually 7 months ago now, in late April, um, 7.5. They sold that house they previously sold for over 700K. It sold for 2,060,000.
Oof.
But
Wow.
the thing is that in 12 years' time, if it follows the same trend, because it seems like everyone owns it for 12 years, if it follows that same trend again in 12 years' time, you think that figure is going to be lower than 2,060,000? It's going to be 3, 4, 5, 6.
Yeah.
It'll be one of those numbers. And that's the thing. It goes up over time. And so if we can get people to hold on to it, then they get the benefit of that. And there's always caveats. If it's a lousy property with it's about to fall down, or if it's in a flood zone, you might want to get rid of it.
Yeah. Yeah.
Otherwise, you hold it. You hold it for as long as possible. Sorry to cut you off, John.
No, no, no. I love it. I mean, I think if we had a little bit longer, there's a couple questions I'd love to ask you, but here's the
Go
thing:
for it.
in the Go for CEO channel, every 6 to 12 months, we want to have you back. So I'm gonna watch this video and I'm gonna be ready for a couple of questions that I have for you because I think it'll come up the same way since we think very similarly. But I want to be respectful of your time. So employee engagement. I know that you talked about there's a lot of independent contractors in the mortgage business. You had some assistants that you had to run through, and unfortunately, until you finally learn to be a better boss. So what's the number one thing that you feel like because of your leadership, because of your culture in your business, of why people stay engaged? And it could be a vendor, it could be an employee, it could be a contractor. What's the reason that there's employee engagement there?
Yeah, sure. So, well, there's a couple of things. People, firstly, everyone wants to be heard and listened to and feel like what they have to say is going to make a change. So, A lot of people will say they openly ask for feedback. I ask for feedback, and if I hear feedback that might be that I didn't do something right, well, I've got two choices. I'm going to get angry about that, or I'm going to go, well, that's probably good feedback. So the first thing is, if you're going to ask for feedback, you've got to be willing to listen to that feedback and not just listen to it, because anyone can listen to it and then go, oh, okay, I'll be better. What are you going to do differently? And it doesn't mean complete flip of your personality, but how are you going to slightly change? So we're about continuous improvement rather than massive changes. The next thing is really bringing them in on what the vision is, because no one wants to be building someone else's ivory tower. They want to be a part of something where everyone is going to win when it succeeds. And we've created reward structures in our business that fall exactly on line with that. We give a lot of flexibility around the time. We treat people like adults. I know these things sound simple, right? But a lot of businesses, they clock the employee in, clock the employee out, and they make them really aware that they've got no choice. It's, it's my option or not. We try and create more of a flexible atmosphere with staff, especially with remote working these days. And so what we've found as a result of that is people start making their own decisions and doing things on their own initiative. And they come up with things that we haven't asked them to do, but they improve the actual business. They come up with processes. They just generally have a better demeanor. If you want to have a really good customer experience, then I think that you need to have very happy employees, because like, you think yourself, have you ever been to a shop, any type of retail, because retail is really easy, you can see what's going on. You can tell when it's a disengaged business.
Mm-hmm.
They're sitting there, they're hitting the phone, they're just, chewing gum, whatever it is. Whereas conversely, you can tell when people love coming into work. Now, I don't want people doing cartwheels with excitement in the morning. I don't think that there's that much fun in what we do. But if they can just be happy and engaged, then it's going to come through. Just the same as if there's just audio. If you're on the phone, if someone's smiling, if someone is distracted, and if someone hates what they do. So
Yeah.
that's what we try and create. And I think that one of the ways that we did that was morning huddles. Once we went to that format, we found, where it's 15, 20 minutes, go through everything that's there and let them voice their own opinion. It's not just one-sided where we talk at them. We do Wednesday training sessions where someone in the team will train other members in an area that they're strong at, which gives everyone an opportunity to show their strength. So it's not just one person every single week. But it's a different person will pick an area. Some are better at phone calls. Some are just better at processes and things like that. So we get them to show, and they like it, and it's great for me as well, because I also learn. Because if you knew how to do everything better than every single person that worked for you, then you probably hired the wrong people.
Mm-hmm.
So I'm learning from those people as well, and it becomes a resource that can be used later in the business.
I love it. I love it. I mean, that was a great breakdown, and really, an engaging atmosphere where people feel like, hey, they're growing and they're making money and they're doing things that really impact. And, together you're building an incredible network and team. So, the last one is operational excellence. And you really, like the first 15 minutes or so of our conversation, really talked about process. So I think just at a very high level, what is kind of the differentiator then, if you were to say like, hey, this is the one thing I think we really do super well when it comes to operational excellence?
Yeah, sure. So I can compare it to where we were before we really focused on our processes. I think what we do is our ability to interpret complex situations and loan scenarios that come in, and be able to simplify them down, not just for
Mm.
the lender, but also for the client. Because you think yourself, no one's signing a piece of paper if they don't know what they're signing. Or hopefully not, right? So we really try and simplify everything down to a point, and it's straight talk. There's no hyperbole involved in it. And so our ability, and what's been passed out to my staff as well, is our ability to find a lateral solution to a challenging problem, and then following it through the whole process to get the end outcome, which is the approval, the settlement, etc. For the actual client. I think that's an area that we're incredibly strong in. And the last one would be consistency, because it's one thing, anyone can be great. Anyone can do a half court free throw shots, anything like that. Everyone could do this amazing shot, but you want someone that's doing it again and again and again and again and again. And if you want to build a name for yourself in the marketplace that's positive, then consistency is going to always trump, this amazing one-off thing, because people don't want it. If I give you great service today and tomorrow you can't get a hold of me, then you're not going to remember the great service you got yesterday. You're going to remember the fact that I didn't get back to you.
That's right. I mean, it's interesting, right? You go to places like a Starbucks because it's the same consistency over and over. I know that my chai latte that I like tall, I'm going to get it the same exact way, right? The apple cider one that I like too. I'm not a big coffee guy, but that's the two things I go there for. And it's exactly the same every single time. So really awesome stuff.
On that one, John, see, it's interesting. See, the person that's running that Starbucks store, they're not sitting there going, oh man, life would be so much easier if I just had one good staff member, right? They're saying my life is easy because I've got a good system and a process. So Starbucks, you pick any of the chains, unless they're sponsoring your show, we're not going to name them, but everyone knows the big chains that are consistent all the way around the world, one of them which has an M on it. And that's the consistency. And that's what we strive to try and do. Of course, it's a long process to get there.
Well, it's a great movie too, by the way. Go for CEO community, the founder, right? Watching that movie and just seeing how he would make people go through steps inside the store, right? To deliver a hamburger, which is crazy, but it really showed why a process really becomes the business. And then obviously the secret of building it out as a real estate company, which is what they became, right? The biggest real estate holder in the world. So awesome stuff, brother, man. Thank you so much for coming on the Go for CEO channel. Super, super appreciative. Is there anything that, hey, let's, we're across the world now. We're global with Go for CEO. So what is one way that people can get a hold of you, a website, an Instagram? Where are you most attainable per se?
I'm big on LinkedIn, so it's just Nathan Massey, linkedin.nathanmassey. You can jump on the Sprint Finance website, which is sprintfinance.com.au. But yeah, reach out to me there if you've got any questions. So I think if anyone's a follower of your show, they're not going to have questions. They're just going to want to keep watching these amazing episodes. I mean, you get all the great people on, John. So.
Well, thank you. Appreciate it. And you know what? It's been an interesting ride. We crossed 100 episodes, and the goal is to get to 1,000. I want to keep the promise I said to myself and to you, community. I actually don't want to bring on a big name. I don't know that they'll come on anyway, but I think the focus here is Nathan Massey, Sprint Financial, right? Doing some great things in Australia. I've had another gentleman that was in Ireland, another one that I just had in, I think it was New Zealand, and then obviously all across America, small town, just good businesses that are running. And we need to learn from those businesses because that's how you get to the M's of the world, right? And all those types of people. So awesome stuff, brother. Thank you so much. Any final words?
Mate, it's a big thank you to you. I think that what you're putting on and the information that you share with people, I know you're doing it because you just know that it's going to really benefit people. So I just want to say congratulations. And to cross over 100 episodes, the average podcast goes for about 9 episodes and then it just stops. You've more than 10x that, and I think 1,000 or maybe even 10,000 would be a worthy kind of finishing point. I think it's 10K now. 10K. So hopefully, hopefully your listeners are going to encourage you to push for the go for 10K.
Well, I love it because, there's just endless amount of entrepreneurs, CEOs and founders around the world. And it's been so cool. Obviously, Clubhouse connected us. And every 6 to 12 months, ladies and gentlemen, we're going to try to have Sprint Financial founder here, Nathan Massey, on. And if you want to see him or connect with him, leave a message, leave a comment on the video that we'll drop here on YouTube or on podcasting, all the podcasting channels. And obviously reach out to him on LinkedIn as well. So thank you, brother. Appreciate you coming on, man.
Lovely seeing you, mate. Take best of care.